Now, between January and November, the price of a litre of cooking oil has surged by 62 shillings and 29 cents, posting one of the steepest rise in prices and making the product out of reach for many Kenyan households. Well, manufacturers say this, unless something is done to address three key challenges, the cost is bound to become increasingly unbearable for Kenyans. Nina Shaban has the details of the factors driving the cost of cooking oil up, including the weakening of the Kenyan shilling.
The cost of a litre of cooking oil has risen by 27.4% since the start of the year. For every litre of cooking oil purchased, Kenyans are parting with 62 shillings and 29 cents more today than they did in January. For households and businesses, this has meant the need to tighten their belts as the rising cost erodes their purchasing power. Manufacturers of cooking oil say three factors are behind this surge in cost.
Firstly, and probably the most important one, is the cost of commodities, because most of our cooking oil is essentially imported from various places around the world, and these are driven by commodity market indexes. And therefore, the index will determine the input raw material cost. The second factor that drives the cost of palm oil or cost of cooking oil is the exchange rate, the Kenya shilling to the US dollar. And then the third factor is obviously the local conversion costs of getting that oil into packed product for consumption by Kenyans.
Manufacturers say whereas the rebound in the global economy following the 2020 COVID-19 induced downturn is welcome, the resurgence of demand is among the key factors which has propelled the rise in the price of cooking oil.
The need for cooking oil has suddenly shot up in the international market because of the open up of the economies around the world. And therefore, the dry pipelines suddenly need to be filled up all over. And therefore, there's a sudden surge in demand that the supply countries have felt. And because this is purely economics and driven by supply and demand, the commodity prices have continued to go up.
The weakening of the shilling is said to be a major challenge in addressing the cost of cooking oil, given that most of the inputs are imported into the country. The shilling has shed 3.2% since the start of 2021, closing Monday's exchange day at 112 shillings and 67 cents to the dollar.
Availability of the US dollar in the Kenyan market has been tight. Whilst the CBK rates are what they are quoted as, availability isn't there, and that then leads to a secondary market from the banks, where rates have gone as high as 115 Kenya shillings to a dollar, and not getting enough to fulfill the requirements.
According to the Kenya National Bureau of Statistics, a litre of cooking oil averaged 290 shillings in November.